Good morning, traders. It is 8 a.m. Chicago time on Tuesday, the 18th of July, 2023. Uh, we're on episode number 2504. I acknowledge the messages that I got from some of you guys. Really appreciate it about doing something special for the 2500th episode. But I got to tell you, there's so much going on. It's really tough for me to do that myself. I'd have to recruit a team to get that done. So to come up with ideas and implement something, not sure what. If you have some ideas, let me know. Again, this is episode number 2504. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're looking at a market that is mixed to slightly off, risk off, just a tinge. This is the Convergent Trading pre-market summary sheet running live here. Again, this sheet is posted every morning, and on the Convergent Trading Twitter feed, you can find it at twitter.com/convtrading. Click follow, set notifications, and it'll come on your stream at about 7:50 Central, 8:50 Eastern. Be sure to follow Conv Trading on Twitter. If you have questions about the terms used here, the terms I'm using in general, you can go to convergenttrading.com, and then in the useful links menu item, go down and look up the abbreviations and the glossary. There's a direct link from here. It is go to ct.pro/glossary-terms. You'll see that information, the bottom right box there. This will help answer some of the questions like what is an opening swing and what is a collision and so on and so forth. We address those in that glossary. It's a great resource to have. There are other resources on that website, like books and things like that. So back to what we have here, we have Asia closed. Asia was mixed. The Nikkei finished strong, about 30 basis points. The other indices were lower. U.S. markets really unchanged, mostly to mixed this morning. You could see the S&P is down 5.25 points, which if you shift your eye to the right a little bit into the rotations, you'll see that the normal rotation in the ES is 4.5 points. And so it is well within the range of one rotation. So it's basically unchanged. For the Nasdaq, it's down 29 points. And you can see the Nasdaq, the rotation, a single rotation can be up to 22.5 points to be considered normal. So that's a little over one rotation there as well. So you get an idea that, the market's basically in balance and hasn't priced anything in. Really, there were some pre-market releases this morning. Of course, we got BAC, Bank of America, came out and beat by about 5%, came out at 88 cents, expected at 84 cents, beat its revenue number as well. Lockheed Martin came in and put out $6.73 in earnings per share versus 6.45. They beat by 4.35%. The other one's Novartis. Novartis came in at $1.83 versus $1.66, beating by 10.25%. And Morgan Stanley this morning came in at $1.24 versus $1.15, beating by 7.8%. PNC, which is another major bank, much smaller than Bank of America and much smaller than Morgan Stanley. Actually, Morgan Stanley is about half the size of the Bank of America, and then PNC is less than half the size of Morgan Stanley. Charles Schwab came out 75 cents versus 71 cents, also beating by about 5%. And Bank of New York Mellon as well came out beating by about 13%. Synchrony Financial, which does a lot of credit cards and things like that, beat by 6.45%. So you can see that the banks are hovering around beating earnings by about 5%. And then after the close, we get Omnicrom, JB Hunt, which is logistics, and Interactive Brokers, which is brokerage. As far as news events and so on, this is where the blackout period started last Friday for the FOMC committee members. The FOMC comes out next Wednesday. Then I think we have ECB on Thursday, and we have Bank of Japan on Friday. So it's crowded. In addition to the earnings that are coming up, it is kind of a really big week next week. Big week. A lot of repricing expected. And so we'll see how that comes through. Canadian CPI and U.S. retail sales are lower than expected this morning. ECB's not says July hike and necessity hikes beyond July possible, but not a certainty. Kind of sounded like the Fed could have hit an inflation plateau. U.S. banks report strong earnings, and ARK writes down Twitter stake by 47%. Ford slashes the prices of F-150 Lightning trucks. These are the EV trucks by 10 grand a truck due to production surpluses, lower costs, and shortages in chips and electronics. So they're able to produce more at a lower cost and are passing those savings over to the consumer. So you can go out there and get yourself an electric F-150, which have been selling like hotcakes apparently for 10 grand less right now. But Ford in the motor company complex, Ford stock is one of the laggards. So it's probably going to take, apparently, it's setting up to take an even bigger hit. This is a big component of the Dow, I believe, and some others. For the rest of the day, industrial production at 9:15. We have cap utilization at the same time. Business inventories, NAHB housing market index. Fed's Barr speaking. Fed's Gibson speaking. They can speak, but there's a moratorium on decision type speak. So who knows what they'll talk about? But none of it matters. I think the market is likely to float around. Are likely to float around for the next week or so until the FOMC comes out. Turning our attention on the FOMC now that we're 7 minutes in. Turning our attention on the auction in the ES. The ES is completely balanced, week high, 11 points of range. You recall yesterday we were looking at the range, and it was also tight. It was 10.75 or something when the trader bite was being done. Let's see, 11.25 when the trader bite was being done, and I warned that it's probably going to be a very, very slow start. Now remember that if we consolidate quite a bit on the open because the range is tight, you need to monitor your volume when that happens, because this could be construed as coiling, or as the market just resting and there's just disinterest. Could be one or the other, and the volume and the way the market's lifting or hitting, the order flow makes a difference as to what to expect there. We can't always guess right, but with 11 points of range, we expect the open today to be pretty dull if it's opening in range, which yesterday did as well. Point of control right there at the 45.50. This has been a key level that we've talked about in the past, and we are symmetrical around the 45.50 in that the high is just 5 points up and the low is about 5 points below that. So we're just hanging out in this major strike value, and we're sitting at the mid of that area right now. We're trading at 45.49.50. So all in all, the S&P is just completely sideways. A quick look at what was expected yesterday. This is from yesterday's Trader Bite. Yesterday, we talked about the 25 here, the 25 level. Let me switch the screen. We talked about the 25 level being very important, an important retest. If it holds above this 25, then we're looking for the 45.60. It says it right here. Looking forward to it pushing the 45.60. I was hoping yesterday that we would actually break through the 25, push below, have a weak return to the 25 or an attempt at the 25, gives us the short setup, and then at that point we're looking for several levels, 4508, 4500, and then the 98 to 93 would be key in that circumstance. And then it brings us back into this high volume node at about 83 or something like that. So that would have been, that would have been the make-a-wish trade for the day. However, if it holds that 25, the expectation is it's likely to retest Friday's high at 45.60.50. And so that's what was expected. Here's what we got. Here's what we got. This is the S&P right here. And you could see compared to the prior session, this is Friday's session right here. The shaded area is the initial balance. So you could see that the initial balance on Friday had a lot more activity immediately because this is a 4-tick Renko. We don't get a bar unless there's movement. Yesterday's initial balance was kind of more directional. And so we ended up having fewer bars as we, tested down and then just continued to push higher. So that's one thing. But the high of 60.50 was taken out yesterday, and we pushed to 65, a new high for the recent auction. So there was a lot of a lot of noise yesterday. If you look at the, and this is using MBO data, those dots, the order flow here is using MBO data. I've not reset my platform yet. And you could see that the delta was just flat. And the flatness was caused by large lots being absolutely non-active. So trades between 10 lots and 100 lots were pretty neutral. Trades below 10 lots, so 1 lots to 9 lots, have been buyers the whole session, and then trades above, and these are reassembled trades above 100 lots and above have actually been sellers, and it's very rare that we see small lots kind of fighting very large lots. Generally, we see small lots and large lots fighting each other. The smaller orders filling large orders, not very large orders, and the very large lots are kind of sitting sideways. Very anomalous behavior. It looks to me, when you kind of dig into the order flow here, it looks to me like bigger participants are either liquidating or hedging. Smaller participants, short-term participants, are buying. And there's some, we'll see what the commitments traders report comes out and says next week, but it's kind of interesting. We're still fighting this top. So as you see, as we push up, we have a lot of collisions. As we push higher, we have a lot of collisions, and as soon as the high is done, we have a collision at the high in blue there, and then we have bids hitting, sellers hitting the bid all the way back to settle at 45.53, back towards our 45.50. And then since then, this morning, what we've done is basically completely Gaussian, very normal distribution, and we have our full session VWAP, full session mid on top of our overnight point of control, on top of the mid-century figure at 45.50. So this is pretty much coiled, and just now we broke the overnight low with a weak high. So I can make an argument today for higher, and I can make an equal argument for lower. for lower. And to me, this could go either way. In either case, there's still, despite the fact that we put in a higher high yesterday, let's switch gears here to TPO charts. Even though we put in a higher high yesterday, it is still it's still shifting the point of control higher, TPO point of control higher, volume point of control higher, but you could see that it is trading across a wide range. It's not really balanced, and to me this looks like a battle, and it's getting weaker and weaker as it pushes higher. I'm still reading this the same way. I expected the high of Friday to hang in there at least through yesterday and today and give us a rounded top for a push lower. It did not. Yesterday's open was very clearly bullish. It opened 2 tick down and then pushed higher, and then we could see B bracket kind of pushing. Let me show you that right here. We can see that A bracket, this is the first half hour, and then the second half hour pushed the first half hour's range extension higher, gives us the initial balance, and then from there you could see that we had higher low, higher low, higher low, and this is the first chance that where we saw it breaking down, and this didn't happen until much later in the session. This is, into the lunch hour, but it had a weak double top, and that happens, the location of the weak double top happens to be where we returned and settled, and we also set our point of control up. So this is market profile. I know I'm throwing a lot at you here, but the structure is such that from the time it opened yesterday, it was quite bullish. I was looking for signals that it might weaken, but there was no short trade at all. If you're in the Convergent chat room, I talked about this. It was grinding higher. I didn't see an advantage. There was an advantage right here. There was a trade advantage right here on this pullback for the single prints. And as soon as it pushed back through, we had an opportunity for a long against the initial balance. There's your initial balance. There's the retest right there. We had an opportunity for a long to target the double TPO high, the weak high, statistically speaking. That high is likely to be taken out by the end of the session, and that stat held true for us yesterday. And so it generated an opportunity to take a 46 long into 53 and look for a push to 60.50. Anything above there was gravy, and it sure was gravy because it pushed up and came right back off, and you could see how the order flow became a lot more active as price pushed higher, right? There was an opportunity for people to lock in some profits, maybe an opportunity for those who wanted to get short, whatever, don't know what they were doing. And we brought it all the way back into this fat area. So we've successfully migrated value higher. We moved the point of control from there to there, and we've moved price higher, so higher highs, higher lows, one session to the next. But overall, it really struggles to hold these prices above this 55, 60 area, and we're going to keep monitoring for that today. We're opening right here, right in the meat of yesterday's profile, and we're going to monitor what it does in that 53 to 55 area. This area right here on the chart is going to be important. We're going to see if it moves higher on the open, moves higher into 53 for the gap close, gap to settle trade, 55, and if it holds below there, then it's very likely to play back the low end of this profile and start to attack the low again at 45.36, and that brings us back to 45.30 down here, a naked point of control, and that becomes the next target. Well, it's not naked anymore, but this 30-31 area becomes a key target down below. That's how I'm looking at it. If it does push through the 53 to 55, and just like yesterday, weak pullbacks then we have to believe that it's likely to push into 65 and move on to the next area, which is, I think, 45, 80, 82, something like that. That's the next play, that it rotates up and pushes through by about 15 points or so. But this morning, the expectation is it's likely to falter up here in the 55, 53, 55 area. So am I going to anticipate that? Am I going to get short as soon as it gets to 53 or 55? No. We're going to see, we're going to wait for it to test, and then we're going to see what kind of an appetite we get at that test, and we need to see it fail before the trade is triggered, and that's where the execution skill comes in. It takes time to develop that. Okay, so let's get out of this and then move over and take a peek at the NQ. NQ, same play, but the NQ didn't really shift the volume point of control, shifted the TPO point of control up. We have a higher high, higher low. So the NQ is doing its job of discovering prices higher. And it did manage to get to that 15,850 area from yesterday, retest, and it finished stronger than the S&P. The S&P pulled back quite a bit more, and it's at the upper end of the range. As you see here, the NQ is relatively stronger, and we're moving into this mega cap reporting phase. So it's hard for me to tell. But if you look at the NQ overall, so this is how I'm monitoring the NQ's action, it is much more bullish. It is hanging on to higher prices much better than the ES is, and it's opening right in the middle of yesterday's range. It's got its point of control below, volume and TPO point of control below, and so to me, the NQ is more likely to find support and push higher than the S&P looks, where the S&P looks like it's very likely to confront resistance and push lower. And the fact is, when the days are opposite each other, when these two indices are opposite each other like this, it is very difficult to get a clean read early. We have to wait and see what develops. So that's the NQ for you. Don't forget that crude has rolled forward to September. The premium is negative 7 cents between contracts, and crude has come right back into the 74. Recall I talked about this, 7 cents isn't that different from month to month, but I talked about it pushing 77, which is quite a lot higher than what was anticipated, and then it would likely come back and check the 74. And if the 74 doesn't give us a bounce in crude right back into 76 in here, these single prints, then crude is very likely to push back into 72, where it has been finding nirvana, has found its peace and quiet at the 76, its acceptance. So today is important. We want to see it open at the low end of the range. It has pushed higher in this first half hour, and it's trading at the low. And we want to see, does it push down through the 74 that it put in yesterday? The low yesterday was 74.02. That's pretty accurate. And we want to see if it breaks lower, and if it does break lower, then it's very likely to work itself into the 72 and come back into balance, and then we expect it to chop around in there. That's just a technical view of crude. I'll leave you with that. Good luck today, and I will catch you tomorrow. Take care.